Hello everybody, this is Lara with your weekly video for gold for the trading week ending Friday 8th of October 2021. I had expected a bounce to end in a target zone 1775 to 1777. It reached a little above that point, 1780.03, and it's turned down really strongly on Friday, giving us a shooting star candlestick pattern on the daily chart. The bearish wave count still is preferred and the downwards target remains at 1406, and now I expect price to continue lower overall toward that target. The invalidation point for the bearish count can now be moved for the short term down to 1780.03, and the bullish wave count still expects upward movement to 2078. Elliott Wave Analysis first and then Classic Analysis weekly and daily charts last. This is the preferred Elliott Wave count. It's very bearish. It sees a huge expanded flat unfolding at a quarterly chart level, and here's wave B and the start of wave C. Wave B subdivides as a double zigzag. Wave C will most likely subdivide as an impulse, and if I have my degree of labeling for this leading diagonal correct in that it's cycle wave 1 within supercycle C, if cycle wave 1 has subdivided as a 5-wave motive structure, then cycle wave C may only subdivide as an impulse, because within an ending diagonal all of the subwaves must be zigzags. And so if cycle C is an ending diagonal, then the first wave should have been a zigzag. And so it looks like supercycle C will be the more common impulse, and that's good because they're easier to analyse. Supercycle C may have begun here with wave 1 complete, wave 2 a deep zigzag complete, and wave 3 may only subdivide as an impulse. Within it, waves 1 and 2 may be complete. If 2 continues sideways as a double flat, it may not move beyond the start of 1 above 1915.42. If 2 is over here, this is where 3 begins. This wave count expects a third wave at primary and cycle degree is in its early stages. The target for supercycle C is for it to reach 1.618, the length of supercycle A, at 657. Supercycle C would be extremely likely to move at least slightly below the end of A, which was in that December 2015 low at 1046, 1047. In order to avoid a truncation, the target would see it achieve that. Cycle wave 3 within supercycle C will have a target of 2.618, the length of cycle 1 at 887. That target fits with the lower target of supercycle C. Let's take a look at the daily chart level, where this high for cycle 2 is this point up here. Within cycle 3, primary 1 looks like a really good impulse, primary 2 an expanded flat subdividing 3, 3, 5 with intermediate C an ending contracting diagonal. If 2 ends here, then 3 begins. Within it, intermediate 1 may have been over at this last low down here. Intermediate 2 may be a bounce for a zigzag. The shooting star candlestick pattern for Friday suggests that this bounce is likely to be over. If that's the case, then within intermediate 3, no second wave correction may move beyond its start above 1780.03. This wave count is now very bearish. It expects a third wave at intermediate and primary and cycle degree has begun at Friday's high. It won't move in a straight line, and it could still start off with a little bit more slowness. It should accelerate through the middle, and it may explode at the end of any one or more of intermediate 3, primary wave 3 or cycle wave 3. Alternatively, at the weekly chart level, this is an alternate for the bearish wave count, still seeing supercycle B over here, still seeing that leading diagonal for cycle 1 to complete an impulse for supercycle C, but instead of seeing cycle 2 over here as a zigzag, what if it's an incomplete regular flat subdividing 3, 3, 5 with primary C to move at least a little beyond the end of A to avoid a truncation. The target would expect primary C to reach a common Fibonacci ratio, a ratio of equality in length to primary A at 1931. Within primary C, intermediate 2 may not move beyond the start of intermediate 1 below 1693.69. The targets for cycle C and cycle 3 and supercycle C remain the same. Cycle wave 2 may not move beyond the start of cycle 1 above 2070.78. If the main Elliott wave count is invalidated at the daily chart level with a new high above this point, then this would be the main Elliott wave count. I expect that's unlikely. At the weekly chart level, this is the bullish Elliott wave count. If your own analysis is bullish, then you may choose to follow this Elliott wave pathway. It is a valid wave count. It is my judgment. It has a lower probability, but your judgment may be different, and that's okay. This wave count sees the December 2015 low as the end of the bear market for gold and the start of a bull market, unfolding as an impulse to be labelled supercycle wave 1. Within supercycle wave 1, cycle waves 1 and 2 are complete well off to the left of the chart. Here is the end of 3, 4 could be over as a triple zigzag, and 5 may have begun there. If 5 has begun here, then primary 2 may not move beyond the start of primary 1, below 1677.64. At the daily chart level, this high here for primary 1 is this point here. Here's primary 2 as a zigzag, 5, 3, 5. The end of 2 is the start of 3. The target is for 3 to reach 1.618, the length of 1, at 2078. 3 may only subdivide as an impulse. Within it, intermediate 1 may be incomplete, with minor 1 a leading contracting diagonal, minor 2 a very deep double zigzag, and where 2 ends, 3 begins. This wave count expects minor wave 3 to continue higher next week. Within it, no second wave correction may move beyond its start, below 1722.77. At the weekly chart level alternately, and this actually has a pretty good look for the bullish wave count, it considers the possibility that cycle wave 4 was not over there as a triple zigzag, that this was just wave A, a leading diagonal within a single zigzag for cycle 4. A leading diagonal and a triple zigzag have exactly the same subdivisions. Within a leading diagonal, subwaves 1, 3 and 5 are most commonly subdividing as zigzags, whereas 2 and 4 must subdivide or may only subdivide as zigzags. Within a leading diagonal, waves 1, 3 and 5 sometimes appear to be impulses, but they do most commonly subdivide as zigzags, and I'm taking those rules from Frost and Prechter's Elliott Wave Principle, the classic 10th edition. That's very clear. If wave A is over here, this could be wave B as a zigzag, and wave C may be continuing lower as an impulse to be labelled at intermediate degree 1, 2, 3, 4, 5. This wave count expects a third wave down at 2 degrees. I actually think at the weekly chart level, this wave count to see cycle 4 incomplete probably has a better look than my first bullish wave count for gold. The target is for primary C to reach equality in length with A at 1522. At the weekly chart level, let's take a look at some classic analysis now and see which of those two wave counts has more support. Price is essentially range bound with resistance about 1835 and support, final support below about 1675, although there is more support around here in a little cluster. ADX tells us that there is a new downward trend, however, but I really would want to see price close below support before I have really good confidence in that, although ADX does support a bearish wave count at this stage. Volume has been pushing price lower. It does tend to be a little stronger in recent downward, in these weeks here, in these downward weeks, and this was a downward week, although it did close green. On balance, volume has a weak range, no signal this week. ADX, we've been over that. ATR is declining as price moves sideways within the consolidation zone. That's normal behaviour for ATR when price consolidates. RSI neutral territory, stochastics neutral as well, and MACD fully bearish. At the daily chart level, here's resistance about 1835, there's support about 1720, and below that final support about 1675. There's a shooting star candlestick after a little bit of a short-term upward trend. This is a fairly bearish candlestick. We can't really tell if the balance of volume for this day was up or down. It has closed green, but only just. It's almost a doji. It's very hard to tell if the balance of volume was up or down for this day. So I don't actually want to draw a conclusion about this volume spike for Friday. On balance, volume is range bound within a relatively weak range, resistance and support, no signal this week. RSI neutral, ADX declining at this time frame at the daily chart level this week. Last week it told us there was a downward trend. This week it says there's no clear trend. Price is essentially range bound. ATR overall flat as price moves sideways. Stochastics neutral. MACD bullish but not fully so. The shorter term line is crossed above the smoothed line, so this is a bullish look, but it's below the zero line, so not fully bullish. Overall, this chart is pretty neutral with a slightly bearish bias. For the very short term, I would be expecting at least a little bit more downward movement following the shooting star for Friday. That's all from me this week with your gold analysis. I hope all our members are looking forward to an awesome weekend.